Alright, what is going on everyone? Hope you're all doing well. First, I'd like to start off the video by saying thank you for 10,000 subscribers. As you can see, we've got that big 5-figure subs. Been waiting for that for a while, I can't lie, but everything is a blessing. Alhamdulillah, we have finally reached that milestone, hopefully to many more. But anyways, what am I going to be going through in today's video? As you can see from the title, I'll be going through a highly requested video, and that is what is the configurations to my Fibonacci tool and how would I use it. Okay, so let's get straight into the video. All right, so first things first is let's go through the the configuration of the Fib tool. So if I just take out the tool right now, just mark out anywhere, head over to the settings. These are the numbers right here. So we have the 0, the 0.5 level, the 0.79 level, that is our key level, and our 0.705 level, that's also a key level, and that is the extreme discounted or premium level at the 0.886. So if you lot want to change the configuration of your Fibonacci tool right now, or even after this video, take a screenshot of it. Okay, so that is the settings for my Fibonacci tool. But now, how would I use this tool? And how would I use it to determine which zone I choose to enter from? Okay, and it is very straightforward. The same way you already know how to use the basic Fibonacci, the 618, 382, whatever these rubbish numbers are. This is the actual Fibonacci tool that you need. Okay, simple. You just mark out the high. Okay, so let's actually replay price back before it pulled back into our zone. Where's my replay tool? Right here. Okay, so if we play price back to this point, let's just say, okay. Now, as you can see, let me get rid of the tool right now. As you can see, we've got two zones marked out. But why do I have this zone marked out as well as the initial candle before that whole break? Okay, why do I have this zone marked out? Now, if we actually fib out the high and the low of the price range, let's see why I had identified that level of supply as well as the original order block ahead. So this zone right here, we can see that there was a drop, a base, and a drop. We already know that's a supply zone, but what was the other confirmation that allowed me to mark out that area? Is that it aligns nicely between our 70.5 and our 79%. These are the two levels that identify your premium and your discounted range, okay? That is the key points where you'd usually identify a reversal or a move away from that point. Now, I'm not saying you can solely trade off a Fibonacci tool. You must build a lot of confluences. So for example, 1, we have identified that level of supply. 2, the supply aligns with our 70.5%. So as you can see, I'm not purely trading off the 70.5 level, no. I'm marking out what zone aligns with our Fibonacci zones, and then that will add more confluence for us to take that trade. And it also adds more confluence to the strength of the zone, okay? So not only did I mark out that order block that we had up here, I also marked out that area because we had that drop base drop and it had that change of character. And 2, it aligns nicely with our 70.5 and our 79%. These are the two key levels again in our Fibonacci tool. And if we just play price, you can clearly see price pulled back, sniped this zone and dropped, right? If I just get rid of the replay, we can see it melted very nicely off of that premium level of supply. And that's literally it. All the Fibonacci tool is used for is to identify your premium and your discounted ranges. We don't trade off Fibonacci tools. All of these YouTube videos that you see saying the golden zone, the only thing you need, is all nonsense, is all bullshit. Don't listen to it. Never trade solely off a Fibonacci tool. We only use Fibonacci tool to build a confluence for the strength of our zones. If your zone is in a premium or a discounted level, that is a good sign. We usually do not trade off zones that align with a 50% because is that a fair value? You'd usually want to get something at a cheaper rate, or when you want to short, you want to short at a more premium price. Okay, so we only use our Fibonacci levels to identify the zone where it is within the range. Okay, now this is an example on AUD JPY. Again, it's short of this supply because it is in a premium level. Okay, and it aligns very nicely with our 70.5 and our 79 Fibonacci levels. And that's literally it. And an example of a couple trades that I have taken using the Fibonacci tool as a confluence, yeah, not trading of it pure, again, not trading of it just based off the Fibonacci level, but how did I use the tool as a confluence to take a certain trade. Now, if you actually head over to my Instagram, I shared this breakdown right here of a trade that I did take. Now, as you can see, very nice shorts. Price tapped into a very nice 15-minute area of supply. And then as you can see, we sold off very nicely, capitalizing a very nice 13 risk to reward. Okay, but anyways, let me get into the breakdown. Now, in the replay price, I accidentally cut out because my phone was low on charge. But anyways, let's get straight back into it. So like I was saying, let's replay price back before it has mitigated that zone, and why I have specifically chosen to target this supply and wait for a confirmation at this region. Let's get straight into that. So first, as I started at the 2 hour, and I identified that this was a very nice level of supply sitting in a nice premium level. Why did I choose this zone? Now, again, pay attention to the Fibonacci levels again. We marked it out from the swing high to the swing low, and as you can see, price is pulling back. But why did I choose this zone to monitor? Because it aligns very nicely with my 70.5 and my 79%. Okay, that is why I have chosen the zone, and that is how you also build a confluence to which zone you should choose. If you find a supply zone that isn't aligning with any of the Fibonacci levels, make sure you do not go aggressive off of that zone. Definitely wait for a confirmation, because when a zone isn't in a premium or discounted level, it is less likely to hold, because price might still pull back into more cheaper rates if it's if you're looking for a buy setup, or might pull back into higher levels of supply to try sell off at a higher level. Okay, but anyways, so I reprepare price.
As no, I promise, like, and
that you had
price back. God, this stuttering is a bit mad. I replayed price back to where it was before I marked out that zone, and as you can see, the zone very nicely aligns with the 70.5 and 79%. And now let's monitor price as it approaches into the supply, and as you can see, we got that beautiful rejection. Okay, but how did I take my entry? And that's what we're going to get into right now. And as you can see, that was the zone I went off right here, because price has mitigated that 2 hour level of supply that I showed you guys. That was in a very nice premium level, which aligned nicely with our 70.5 and our 79%. Okay, so as you can see, we got that beautiful rejection which broke this low and broke that low, validating this level of supply. Okay, so that was my confirmation entry, and as you can see, we got that beautiful rejection. And if we head over to the higher time frame, you can see that we targeted some previous levels of demand, which also aligned with our discounted levels. Now, if I flip up the low and the high for you guys, you can clearly see that the zone aligns very nicely with our 70.5%. So this is also a very valid level of demand. But anyways, so to recap everything that I took before executing this trade, price pulled back into a 2 hour premium level of supply, which aligned nicely with my 70.5%. Once I got that rejection, I broke down to the 15-minute, waited for some lows to get broken. Once these lows were broken, I identified the last candle before this impulsive move over to the downside, marked out from the wick to the wick. Price pulled back, got my confirmation entry at this point with my stop loss at the previous highs. And then we targeted the previous level of demand, which also aligned with our 70.5 discounted level. Okay, and if I just play price right now, what can we see? Beautiful drop into this demand and beautiful reaction off of that demand. Okay, so it played out very nicely. And if you continue playing price, let me show you guys this other sell that I wanted to take, but unfortunately my limit was not triggered. It completely left me out. But as you can see, price took out this low, and I had identified a nice level of supply here on the 1 hour. No, I'm pretty sure it was on the lower time frame. Let me find the exact one. 15. Definitely it was the 15. Yeah, as you can see, we've got some nice levels of supply here on the 15. But anyways, let's stick to the higher time frame to quickly wrap up the video. So once I identified that level of supply and price took out some lows, I marked this level out. Why? Because it aligned nicely with my premium level. If I fib up the high and fib up the low of that price range, okay, as you can see, that was the high, that was the low. Price pulled back very nicely into this level of supply that we had on the 15-minute, and this level of supply aligns nicely with our 70 point. one last time. The video cut out again. Now this time it wasn't because of my charge, it was actually because I had no more storage on my phone. But and I know I was using this camera previously to record my videos, but as you can see the mic is not here. My friend actually left it at his house, so that's why I'm recording on my phone. But anyways, before the fucking phone stops recording again, let me just wrap it up quickly. So this was the zone that we went off, but again, I didn't get into this trade because my limit did not trigger. I don't know if you lot saw my Instagram story, but the limit didn't trigger at this point. But anyways, we marked out the supply after these lows were broken. Once these lows were broken, we fibbed up the low, the high, wait for the pullback into our 70.5 and our 75 levels. We did not take this trade solely because of the 70.5 and the 79 level. We added the Fibonacci tool as a confluence to which supply would enter a trade of. Does that make sense? So again, all of these YouTube videos about Fibonacci that you're seeing, enter of the 618 level, bullshit. Never enter a trade solely because of a fib level. It is only a confluence to your supply and demand regions. That is the only reason why I would use a Fibonacci tool. Okay, I hope that makes sense. So again, never ever ever enter a trade just because it touched a 79% or a 70.5%. I did not teach you that, and if you lot do that, again, that's on you. But again, like I was saying, the only time we'll use a Fibonacci tool is to identify our premium and our discounted supply and demand levels. Okay, so I hope that made sense. I'm going to go through one more example, and that was on EJ, and that is also a trade that we took, and which I also shared on my Instagram. If you like, head over there right now, right here. Price tapped into a very nice level of supply, premium supply, which aligned nicely with our 70.5 level. Okay, as you can see, took out this liquidity, tapped into this supply, and very nicely sold off. That's all there was to it, and this is proof that I was sharing it with the team. Where's this sound? Anyways, if you like, head over to my Instagram, you can watch this video. Anyway, it's just proof that I was sharing it with my students. But let's get back into the video so we can wrap it up. So why did I take this trade and why did I mark out that supply? Let's replay price back to this point. Okay, and what did I see? It was on the 30-minute. Right, so high and the low of this range, right? So you fib it up. Once we fibbed it up, we started to identify our 70.5 and our 79 levels. Once we identified these levels, we started to look for supply and demand zones at these regions. And what did we find? This very nice 30-minute level of supply that aligns nicely with the 70.5% at the Fibonacci level. Okay, so we did not take this trade because it pulled back into the 70.5. No, we identified the supply which aligned with our Fibonacci tool. Remember, you have to use the two together. Okay, and we also identified we had some equal highs here. Once these equal highs were taken out, we got into this sell at this point right here, and as you can see, this is the way it played out. Mitigated very nicely and melted very nicely, reacted of this beautiful level of demand, and then continued over to the upside. Very nice entry and very beautiful exit. Why did we exit here? Because we had some equal lows that got taken out, and then price impulsed back over to the upside, and that was the last candle that took out the lows. So this was a nice level of demand. So again, we saw the fat level of supply which had liquidity just below it. Price pulled back to take out the liquidity, tap into this supply that was unmitigated. This supply aligned nicely with our 70.5 level. Look at all of these very nice confluences that we were having when we took this trade. Yeah, liquidity was taken out, unmitigated level of supply. The supply aligned nicely with our 70.5 premium level, and it sold off very nicely into a very nice order block here, demand level, which took out some liquidity, and price very nicely dropped into it, tapped us out, and then continued over to the upside. And that is it. All right, and that was it to today's video. I hope you lot grasped how we would use the Fibonacci tool with our strategy. It's very straightforward. Again, we did not take any trades using the Fibonacci tool. We only use the Fibonacci tool to identify our supply and demand levels that align with our premium and discounted ranges. Okay, and in terms of discounted and premium ranges, you can find a detailed example of what the discounted and premium ranges are. In which video was it? In how to locate the correct supply and demand zones, which is also free in my YouTube channel. Definitely go check that out. And yeah, if you guys do have any questions, drop it in the comment section below. I'll try to get back to you there. If not, DM me. I know I haven't been getting to too much of your DMs because they have been flooding and they're a bit too much, and most of them are repetitive. So instead of replying to you guys, I just again, like this example, I just record a YouTube video and hopefully help out all of the unanswered DMs. But yeah, hope you lot enjoyed today's video. Take care of yourselves, and thank you for 10,000 subscribers.